A lot of the times, price retraces into a key level that you don't expect it to retrace into before it continues higher in a bullish scenario or it continues lower in a bearish scenario. In this video, we will be going over that hidden key level, which is also a PD array. And that hidden PD array is called your redelivered rebalance. So if you look at this chart over here, everyone should be familiar now with what an imbalance is. An imbalance is when the high of the first candle and the low of the third candle, aka your last candle, it leaves behind a gap in between them. This gap right there, from your high to the low of your last candle, which intersects with your second candle, this is your imbalance. The redelivered rebalance is similar, but instead of it being an inefficiency, it is already a balanced price range. So, what is your redelivered rebalance? If you look at this example below, the close of that first candle to the low of your third candle, this is your redelivered rebalance. What's important here is, when you have a gap like the imbalance above here, it's important that the first candle's upper wick needs to fill in the gap completely. So if you look here, notice how this upper wick closed past the low of your third candle's bottom wick. Right, so to put it simple, your first candle's upper wick should have a closure at least above the bottom of your third candle's bottom wick in a bullish scenario. Vice versa if it was bearish. Your first candle's bottom wick should have a closure past at least the top of your third candle's upper wick. Right, so if you look here at this imbalance, if this candle closed above the low of this candle's lower wick, this now doesn't become an imbalance, and instead it becomes a redelivered rebalance. So you would move it from the low of your third candle's bottom wick to the close of your first candle. This entire area now becomes your redelivered rebalance. So the reason why you see price come to this level a lot and then continue higher, leaving behind the PD arrays below here. So imagine this is now your imbalance. The reason why it does that is because this is already a balanced price range. So when price comes back to mitigate any orders here, there is no need for price to rebalance any old inefficiencies because this is already a balanced price range. So this imbalance no longer becomes an imbalance. This simply becomes what is called a breakaway gap. It's called a breakaway gap because when you have a redelivered rebalance or a balanced price range above an imbalance in a bullish scenario, because you are anticipating for this imbalance to not get tapped into, this becomes your breakaway gap. Now, this doesn't necessarily mean price can come into here and then come below here before continuing higher. If price comes back to this imbalance, it doesn't invalidate your overall bullish narrative. And instead, price just wanted to come deeper to accumulate enough positions to distribute higher. Right, so that is your redelivered rebalance and your breakaway gap. So if you have a look at an example here, look at what you get. Here, you have a break, an imbalance here that price comes back into before it continues lower. In this segment in price, there was no redelivered rebalance left behind until price comes down into here, taps into this bullish order block, and this is where you're getting that bullish reaction. So, because we're getting that bullish reaction, this is where we could drill down onto your lower time frame and possibly look for short-term longs. So here, let's see what price does. Takes out this low, and it gives you a displacement higher, breaking out of this swing high. That becomes your market structure break. However, look at what it leaves behind. This is your redelivered rebalance. Because of how tight the range is, it doesn't necessarily leave behind an imbalance. So there's no breakaway gaps to be anticipated. And if you keep playing price out, notice how the bodies close within this redelivered rebalance. Again, you have another one over here. From the open of this bearish candle to the bottom wick of your third candle, this is your redelivered rebalance. Again, price comes back, respects it, and this is where you can anticipate it to continue higher. Yeah, the bodies are respecting that redelivered rebalance. If you didn't know what a redelivered rebalance was, you would be unsure as to what key level it is currently respecting. And as you would anticipate, it continues higher. If you have a look here, this is also another example, a pretty clear one. You had this market structure break to the upside. It leaves behind an imbalance here. But also, look at what's ahead. A redelivered rebalance. Like so. Price comes back into it. Look at how precise it mitigates this redelivered rebalance. The open of this redelivered rebalance is pretty much in line with the low of this candle that mitigates it. And you can see here how this imbalance was left behind. So this becomes your breakaway gap. And a lot of times this is the scenario. Price comes into a key level. If you didn't know what redelivered rebalance was, you would be confused because price comes back into this key level and it doesn't come back into this imbalance before it continues higher. Another thing to note is redelivered rebalance, they don't happen all the time in every single leg, but when they do, that's where you can start to anticipate breakaway gaps forming and redelivered rebalance if it was your first line of defense in this bullish scenario, for example, to be mitigated before it continues higher. Any discount rates below that, price doesn't necessarily need to come deeper to mitigate any further. However, like I mentioned, even if it does do that, it doesn't invalidate your overall bullish narrative, because sometimes it will do that to accumulate enough positions to distribute price higher. Now, if we start with our top-down analysis and see how we could utilize redelivered rebalance with our entries now, this is a classic market maker sell model, right? But this doesn't necessarily mean price is going to continue lower forever. As you can see here, price always has to have some sort of retracement before distribution lower to take out these draws on liquidity. So if you zoom into here to your immediate price action, look what price has done here. It's currently consolidating. But Wednesday took out your previous week's low. So because Wednesday took out your previous week's low, this is where you could anticipate for some sort of a bullish reaction, possibly taking out these low resistance trendline liquidity, tapping into some sort of premium rate before continuations lower. So that is how you can start to build a narrative based on your immediate price action. What has price reacted off of, and how is the reaction given to you? Because right now, it's clear that there's no conviction yet for price to continue lower. And this sweep on sell side liquidity was to possibly accumulate more long positions to distribute it higher and take out these resting trendline liquidity, possibly accumulating more buy side liquidity to then distribute it lower, in line with your market maker sell model. So this is where you can start to drop down to your lower time frame. So this is where you had the sweep, and this is where you had your market structure shift. So this high over here. Now, the exact same thing we've been doing this entire time. In all the previous videos, you would look for a discount array. You have this order block, which also overlaps with this imbalance over here. Right, so this is the key level that you will look for price to come back into. Retrace into here before continuations higher, because price only has two functions: rebalancing old inefficiencies and seeking new liquidity, such as these liquidity over here. Right, they become your draws on liquidity. Keep playing price out. You can see it comes back into this imbalance. This is where you could drop down onto your lower time frame and look for that realignment to continue higher, right? Because your hourly is now bullish in line with your daily sell side sweep. So because on the daily you're anticipating for a temporary bullish price action, on your hourly it is confirmed when you have that reversal to go bullish. So when price retraces into a discount rate on the hourly, this is where you will look for that confirmation, and that's exactly what you get. Price has a strong displacement past this down candle, so that becomes your change in state of delivery. Your down candles are supporting price to go higher. And that is one market reversal pattern that isn't your market structure shift or market structure break. Because you had that displacement off of a higher time frame, key level being your discount array on your hourly time frame, that is enough conviction to show you that there is a market reversal happening in place, especially backed up with the fact that it closes past the open of this down candle. So as they say, in a bullish scenario, down candles should be supporting price to go higher, and in a bearish scenario, up candles should be supporting price to go lower. So that's the theory behind this. Right, you change the delivery, now you can anticipate for higher price action to take out these draws on liquidity before eventually your overall draw over here. So what PD arrays are left behind? You have this imbalance which overlaps with this bullish order block, but you also have this redelivered rebalance. So what could you anticipate? Because you have a redelivered rebalance here, you would anticipate for this to become your breakaway gap. That means you're not anticipating for price to come back into here, because there is a balanced price range or a redelivered rebalance above this imbalance. Right, so like I said, this is where your entry could be. Stop loss just below here, and you could target your immediate draw liquidity and then your overall draw liquidity. The reason being is because once price has mitigated a redelivered rebalance, it reduces the likelihood of the imbalance below it getting tapped into, because this area over here is already balanced. Right, so your entry could be here. Playing it out, you can see how even then, the 50% level, the body respects the 50% level of the redelivered rebalance. Comes in, taps you in, and then eventually hits your take profit for a nice 2-hour trade. So that is how you could use your redelivered rebalance in your entries. And a lot of times, this explains why price doesn't come back to your imbalance levels. Right? Always be on the lookout for the redelivered rebalance, because when there is a redelivered rebalance, there is much more likelihood that that PDO rate is going to get mitigated, and that would be enough of a mitigation for the markets to distribute price higher. I hope you guys found this video helpful. If you did, please like and subscribe. If you have any questions or suggestions for future videos, please leave them below in the comments. And like always, take care, and I'll see you guys in the next one.